Time now for an in-depth look at the market news this afternoon, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, Happy New Year, and good to have you back on.
Happy New Year.
Well, during the holiday weekend, the Wall Street futures were pointing to a strong open on Monday, but instead it was a significant drop of 1.25% to 1.5%. Lockdowns in the UK and parts of the US getting tougher. Also, the election issues in the US. So what's the story in the global markets and here in Korea?
Yes, as you said, overall market declined quite sharply in U.S., somewhere between 1 to 1.5%, because of the political issues as well as the COVID-19 issues. If you look at the political issues, if you look at the Democrats and the Republican, the Georgia state is a key issue. That the Senate, if the Republican wins, then there will be a blue wave. And if actually the blue wave happens, then possibility of the tax rate hike that might result into negative earnings growth rate for some of the big companies in the large cap tech sector. So that has resulted into quite significant correction in the market. And also the COVID-19 incidents are quite sharply rising in U.S. as well as global overall. And the vaccine rollout seems to be in a slow pace, and that has resulted into kind of gloomy outlook for economic growth rate recoveries. So all that has resulted into the overall correction of U.S. market. But despite all that, if you look at the Korean market, it seems to be rising rapidly because of the expected earnings growth strongly coming from the major main sectors in the semiconductor, as well as the electric cars and also the alternative energy segment.
Well, the countries of OPEC ended their talks on Monday without a deal on production levels for next month. So oil prices are down a bit. The price of gold is back up, though, close to where it was in early November. What do you see happening with oil and with gold?
Yes, I think that these are two different issues because if you look at the oil side, as we know, the electric car portion of the market share out of the overall automobile industry is rising rapidly. And that results into a significant decline of the overall oil demand, while the continuation of the shale gas production, of course, there's some kind of correction in terms of the OPEC as well as the U.S. Supply of the oil, but the level is still relatively much higher compared to 5 years ago when shale was introduced. So all being said, the supply and demand side is making the oil price to remain quite low. I don't think the oil price can recover to the historical highs of about $70, $80 per barrel, which was about a few years ago, and also $150 about 10 years ago. I don't think that kind of prices can be reached. Rather, we are looking at oil price somewhere between $45 to $55 range bound because of the changes that you are seeing in the economic structure as well as the oil demand side. As for the gold, it's a totally different story because that is due to the continued liquidity injection through the M1 growth rate that you are seeing in U.S. as well as most of other countries. So continuation of increase in the currency supply that results into the demand for the alternative asset, including gold and silver and maybe the cryptocurrency, all rises quite significantly because of the liquidity injection. So we think that gold price will continue to show rising trend because it is a substitute for some of the cash at the current point in time.
Well, let's talk about some of those alternative assets, Bitcoin specifically, and the big rally. On Sunday, it broke through $34,000. It's now pulled back closer to $31,000. Of course, with Bitcoin, there's always the risk that the bottom falls out completely. But how long do you think this rally will last?
Well, this rally will last as long as the government continues to inject liquidity through the huge M1 growth rate. If you look at the numbers, you're looking at Korea, around 28% year-on-year growth rate of M1, which is the money supply, including the demand deposit. And if you look at that number for U.S., it is at 65%. So quite ridiculously high numbers. And if that happens, then if you're holding on to cash, then your value of cash declines quite sharply because of that injection of additional new liquidity. So therefore, demand for the alternative assets, cryptocurrencies and gold and silver rises quite rapidly. And given the fact that right now is the era of the fourth industrial revolutions, that the cryptocurrencies are widely used for the settlement through the internet. So if that's the case, then the demand will continue to rise. However, because the central bank's role is very important, you need central banks to allow this kind of currency to be traded widely. If the government and central banks start to prohibit the level of trade through the cryptocurrencies, then the demand will probably diminish quite significantly quickly. So therefore, it all depends on what government does. And right now, as far as government is concerned, they continue to inject liquidity, and also they are promoting continuously the online trade. So if that's the case, I think that the cryptocurrencies, the Bitcoin prices will continue to show rising trend over the next probably 1 to 2 years.
Got it. All right, Mr. Yu, we'll leave it there for today. Thanks so much for sharing your insights with us.
Thank you very much.